So investors are signaling they will miss Warren Buffett at the helm of that company, Berkshire Hathaway. Joining me now to talk a bit more about this is Barry Schwartz, Chief Investment Officer and Portfolio Manager at Baskin Wealth Management. Thanks for joining us today.
Thanks for having me.
So what do you expect from Greg Abel?
Well, he's a very sharp guy, and he's been at Berkshire Hathaway for quite a long time. This is not a surprise, of course, to the markets. Warren Buffett, God bless him, 94 years old. At some point, we would prefer for him to retire than, the alternative. This is a much better transition for the markets to digest, and you can see that the stock is down 5% today. That's, in the grand scheme of things, that's nothing. And given how well the stock has performed over the past, forever, Buffett has compounded Berkshire's share price 20% for a very, very long time. Stock hit an all-time high on Friday heading into the meeting. So, for all we have is what Berkshire and Buffett has told us about Greg Abel, and he said that Greg Abel is as good as Buffett is in terms of allocating capital, and he may even turn out to be a better business operator than Warren Buffett, right? So we all know Buffett got his start picking stocks, allocating capital that way, but he runs a more decentralized organization, letting managers at his acquired companies and operating businesses run the show. But that's led to some issues over the past few years. Its insurance business, Geico, was underperforming. Its railroad business didn't adopt the precision railroading that some of the other Canadian railroads had done. And you saw it in the results, just poor results from a lot of the operating businesses. I think Greg Abel, who's been the vice chair of the operating businesses now for a long time, is responsible for improving the results at Geico, as well as improving the results at the railroad and improving results at the energy division. And these are multi-billion-dollar, businesses inside Berkshire. So we may lose something on the stock picking side, but I think we're getting a shrewd operator. And I'm not selling a share, Morella. In fact, today we bought more on the dip.
Yep, 5% down. It's a bargain buy there. Let's talk about stocks for a moment. You have another threat by Donald Trump, this time for the entertainment industry. He wants to tariff movies produced outside of America coming into America by 100%. So this is now what he's asking his administration to look into. What are the stocks you see affected? How far could this sort of bubble out to?
Well, obviously the impact would be Netflix and Disney, although Netflix doesn't really make movies to sell in the theaters, right? It's for its subscribers. So I don't. This seems absolutely silly. I don't even know how it's going to play out. I don't know how do you tariff movies? This seems like an overreach of power by Trump. I get the tariffs on actual goods if you want to encourage manufacturing, but this doesn't make any logical sense to me.
Well, we know Trump doesn't always make logical sense, but he'll still try and make it happen, right?
For sure. So our clients and I own shares of Netflix. You can see that Netflix stock was barely down. It was a bad day anyways on the markets. So I think the markets are not really worried about this or what the impact will be. So I would just take this at the moment as a nothing burger.
Got it. Okay. I know you think that the S&P 500 could rally if AI picks up. How much room is there for that?
Lots of it, of course, right? So a lot of investors, of course, I won't buy the Magnificent Seven. They're overvalued, blah, blah, blah. And they missed them for years. And we had the pullback the last few weeks. And that was really the responsible reason why the stock market in the U.S. was underperforming, right? There's just such big drivers. The top Magnificent Seven names, plus Broadcom. You have 8 names in there that really are spending a lot of money on AI and will depend, of course, on the adoption of it. But you see, of course, from the results of all the mag stocks, and it's just the demand is off the charts. You had some hiccups, some worries, some bumps that the demand wasn't there or would slow. That narrative turned out to be completely false. Every company is going to be spending now more on AI, whether they're using it for their own services or for their customers, or whether the hyperscalers are benefiting from the demand for cloud storage. And so this is a trend that is going to, in our opinion, help the Magnificent Seven, as well as some of those ancillary companies. So there's we had worries that AI was going to be speculative, a la the .com bust, the fiber build out, but this is not the case. And you know what, Morella, even if it doesn't work out with AI, these companies, Apple and Microsoft and Google, have core businesses that are generating oodles and oodles of profit to begin with, that even if they blow their brains out on AI, it's not a game changer or a thesis breaker for a lot of these businesses. But I'm going to take the opposite. I've got, since the earnings releases of those companies, I've gotten even more bullish on AI, and I think we're still just early innings into the AI theme.
Okay, let's get to a couple of your picks then. Let's start with Adobe. Do you see Adobe? I know they've been trying to practically put AI out there into its user services. People haven't been picking it up that much, but I'm wondering where you see it down the road.
Yeah, so the amount of money that companies have made on actual charging for AI services, charging for AI premium licenses, what have you, is immaterial at the moment. And Adobe, even though it's has an AI business at a run rate of now close to $500 million of revenues, that's nothing compared to the size of Adobe. It's a multi-billion-dollar gigantic business, as you know. But the valuation on Adobe is way too cheap. This is a company with 90% gross margins. This is a company that's guiding for double-digit top and bottom line growth for many years to come. This is a company that's producing an unbelievable amount of free cash flow, and all it's doing is buying back stock. And there's no evidence that it is an AI loser. Sure, there's a lot of these competing, text to prompt type companies like Sora and OpenAI, where you can make these funny, silly videos and even edit them. But I don't think they're commercially viable at the moment. If you're a marketing professional, a creative professional, you're still using Adobe at your company. It's the only true commercial use.
Barry Schwartz, I got to leave it there. I'm out of time with you, sir, but thank you for your time. Barry's the Chief Investment Officer and Portfolio Manager, Baskin Wealth Management.